Oh man, here we go. It is time for another CPI inflation report. Whatever the heck you think it is, we's about to get it. And we did obviously get our good old BTC approvals yesterday, which, everybody was kind of expecting that, so that wasn't much of a surprise. Nikki Haley debate yesterday with Ron DeSantis. I don't know. Who do you think won on that one? But most important, quite frankly, for pretty much everybody's portfolio right now, has to do with CPI. Whether you're short, think we're about to see a reactivation of inflation, or you're long and you're like, oh my God, please don't let me go bankrupt. I don't know what your situation is, but I want to see some of these dollar hollers coming in straight low, okay? So let's see what we got. We're looking for, Kevin is looking for the double twos. You might remember us talking about that last night. We're looking for 0.2 and a 0.2, but what Kevin's looking for and what other people are looking for, yeah, different things. Kevin's looking for 0.2. Markets are looking for CPI 0.2, 0.3 for core, so we got a little buffer room there, and then 3.2 and 3.8. And frankly, we're only about 5 seconds away, so check out the courses on Building Your Wealth. Link down below. They're awesome. Prices go up at the end of the month. Okay, we got, not great, 0.3, 0.3. Okay, darn, damn it. And then we got 3.4. Every number came in a little bit high. Fantastic, not. 3.4 versus 3.9 for the 3.8 one. So again, instead of 0.2, we got 0.3. On the 0.3, we got 0.3. On the year over year, which is affected by energy prices, we got 3.4 versus 3.2, so don't really care about that. The core number, that's what matters. The core number, the expectation was 0.3, we got 0.3, but year over year came in at 3.9 versus 3.8. So little hot on all sides. Kevin was wrong. Damn. Initial jobless claims came in at 202 versus the 210 expected. So hotter on the job side, hotter on the CPI side. Initial jobless claims coming in at 202 versus 210. Also, again, a little hotter. And continuing claims coming in at 1,834,000, so 1.834 million, versus the 1.87 expected. We had revisions down on the continuing claim. Actually, no, we had a revision up on the continuing claims by about 13,000. Okay, so a little warmer CPI report than expected. Not horribly warmer, but slightly warmer. And so this is what your Qs are looking like right now. You can clearly see some delicious old red candlesticks here. So let's go figure out what happened. So really the slight beat on the year over year probably is because the CPI month over month, instead of coming in at 0.3 or 0.25, came in slightly higher. It probably came in at like 0.28. So we'll evaluate what actually happened here in just a moment. Let's see what we got. So looking for the actual number of what we got here. So the core read was 312. The prior core read was 312. And the current read is 313. Let's do the exact numbers here. So we had 313.216 divided by 312,251. Ooh, yeah, that's 0.031 basically, the way to round that. So that wasn't anywhere even close to 0.025. So, oopsies. So what happened there? Shelter up. Well, Shelter's always been up. I want to see to what degree Shelter was up. So, wow. All right, let's see what we got here. And there it is. Here's the actual report. Let's find out what's inside. Consumer prices for all consumers increased 0.3% in December on a seasonally adjusted basis after rising 0.1% in November. Over the last 12 months, all items increased 3.4% before a seasonal adjustment. The index for Shelter continued to rise, contributing over half. Wow, over half of all items' monthly increase was contributed by Shelter. Energy index rose 0.4 over the month. That makes sense. We saw oil and natural gas move up last month. The food index increased 0.2% in December as it did in November. The index for food at home increased 0.1%. Fine. Index for all items less food and energy rose 0.3. That was the expectation, in fairness. Same monthly increase as November. Shelter, motor vehicle insurance, medical care increased. Household furnishings, operations, and the index for personal care were among those that decreased. Fine. So, but at what level? So let's get the actual tables here. And once we get the actual tables, we'll get a little bit more of a nuanced understanding of why this came in a little warm here. And then obviously we'll be looking at what the suits have for us as well. This is, I'd say, slightly disappointing, but totally okay. Let's find out. So here are the categories. I'd like to start at the bottom, quite frankly, start at the bottom because of the services. What you're looking for, though, by the way, is just remember this. First number that you're going to see, relative importance. Last number that you're going to see, seasonally adjusted month-over-month number. Okay, great. So let's go to the bottom. So what do we got here? Financial services coming in negative. Financial services coming in negative at 0.2%. Apparel, dry cleaning, 0.1. Laundry and dry cleaning, 0.4. Funeral expenses, 0.5. Miscellaneous personal services, 0.1. And all, miscellaneous personal services, all of that lumped together was 0.1. That's not that big of a deal. Personal services, 0.1. It must have been medical by most part here. Telephone services, 0.1. What else do we have here? We've got postage and delivery services comes in at 0.4. That's after 3 months of decrease. Tuition, childcare, 0.2. Okay, where are the hot ones? Because I'm not seeing the hot so far. Recreation services, wow, 1.6% to the upside. That's a huge one. But that only has a weight of 1.57, but recreation services came in hot. Club memberships. I mean, is this the Taylor Swift effect again? I don't know, but recreation services coming in hot. Photographers and photo processing, 0.1. Pet services, including vet, 0.8. Ooh, that's hot. Okay. Recreation services, yeah, boy, recreation pets over here. My goodness. 3% in total there of weight. Motor vehicles and transportation services. Transportation services coming at 0.1. Car and truck rental come in negative. They've been negative for a while here. Motor vehicle repair has been negative. Motor vehicle body work came in at 1%, but that has a very, very low weight, so that doesn't matter so much. Mostly because people don't actually pay for body work on a daily basis, so that's not that big of a deal. Motor vehicle insurance, 1.5%. That's a big one in itself right there. Wow. Airfares. Bro, how do airfares pop up 1.0% when the doors are falling off? Intercity transportation comes in at 0.4. Jeez, good lord. Hospital-related services, 0.5. Okay, yeah, there's some numbers in here that come in. These are quite a few of them. Say that's hospital. That would be motor vehicle insurance, airfares, recreation. Well, these are quite a few categories right there. All right. Medical care services also comes in warm at 0.7. It's not great. We've got water, sewer, trash collection comes in at 0.1. Rent of shelter. Rent of shelter. Interesting. Actually got a 0.4 read here. And then shelter broadly, we got 0.5 versus the 0.4 last. So rent actually came in a little lower than expected. Lodging away from home came in a little lower than expected. Owner's equivalent rent is still sitting elevated a little bit at 0.5, which has a very, very high weight of inflation. Okay, that's fine. I'm not so horribly worried about that one. Other goods coming in negative 0.6. Alcoholic beverages away from home, 0.2. Alcoholic beverages in general, 0.3. Education and communication commodities, negative 0.2. Rec goods, negative 0.5. Sporting goods, negative 1.2. Recreation goods, negative 0.5. Medical care commodities, negative 0.1. All goods are like negative here. Motor vehicle parts and equipment. Oh, well, that's not necessarily true. Motor vehicle parts and equipment coming at 0.5. Used cars and trucks. Wow. We were expecting that to be negative. Most people on Wall Street thought that would be negative. 0.5 is what we actually got. New vehicles comes in at 0.3. Footwear, negative 0.4. Women's and girls' apparel, 0.3. Men's apparel, Flat. Men's and boys apparel, negative 0.4. Apparel in general, 0.1. Household supplies, 0. Tools and hardware, negative 0.4. Appliances, negative 0.2. Furniture and bedding, 1.2 to the downside. Food and energy, there's that 0.3, all summed up together. And of course, we have some energy numbers over here, gas and otherwise. Okay. For the Fed, this report doesn't really argue for the favor of teeing up a March rate cut. Yeah, unfortunately, we've seen that like nonstop. It's always been, like over and over and over and over again. Everything's been screaming no March rate cut. So unfortunately, this is the first CPI report, or sorry, the only new CPI report we're getting between now and the Fed meeting. So it probably means bond yields are going up, and this guy's going to be happy.
Interpretation of the agency that's basically in charge of short-term interest rates. What's changed? Why is the market moving? It isn't because the market was wrong. It's because this data has proved that some of the perspectives of some of the Federal Reserve officials that the market believed was misinterpreted. And inflation, whether it's annualized, whether you look at the indexes, whether you try to understand why the average American just doesn't feel as good as Wall Street, once again, I say go to that calculator on the BLS website. It's got updated D's data, and my guess is it's still going to show basically 19 to 20% inflation since pre-COVID, and that's what Americans feel. And
yeah, but bro, wake up, man. That's not what we're talking about. Like, I think that's, I'm going to read what the suits are saying right now in just a moment too, but like, bro, wake up. What we're reading and studying on CPI has nothing to do with what the average American is thinking about today. And that's frustrating. I agree with that. We've had a lot of inflation. Honestly, we're probably over 30% inflation. But that has nothing to do with what the CPI report is. So the conference board tells Bloomberg TV the Fed will probably start cutting rates around June. That's going to get priced in. Markets are going to get down on that for a while, if that's true. We know wage inflation is cooling. That's true. We got with core inflation still near double the Fed's target. We remain skeptical that the FOMC will cut overnight rates as soon as the March reading. A lot of suits now kind of backing off on the March estimate. I agree. I think we're probably not going to see March. But then again, you're only getting one more CPI report and one more jobs report between March and May, which is weird. The timing of it is pretty weird. But anyway, the next Fed meeting is going to be December 31st. Between now and December 31st, by the way, we're releasing a bunch of new lectures in the Gold course. So if you have suggestions, leave comments in the Discord, metkevin.com/chat. It's also linked down below. And then, of course, join the Gold course by going to meetkevin.com because we keep adding new lectures to it. It's really good. Anyway, okay, let's get this out. So let's see what we've got here. We have housing contributed to more than half. We read that. Energy prices continue to climb with both energy and gasoline up. That likely explains the slightly higher than expected headline monthly reading. That's fine. But we also had a slightly higher year over year on the core. That did not come in at 0.25. We got basically a 0.3. Reaction in yields has obviously been clear here. Two-year yields jumped 4.38. Yields on the 10-year above 4% again. They slightly dipped yesterday under 4%, but they've been kind of bobbing around 4% this morning. We're up only about 1.3 basis points. So the market isn't like heavy moving on this, but it's definitely moving on this. Before the seasonal adjustment, gasoline prices did just. After the adjustment, gasoline prices rose. Shelter is the standout, but there were also increases in the cost of car insurance and medical care. We saw that. Those were expected to be, negative, frankly. Recreation, new vehicles, education, airfares were among the biggest that climbed. Some of those were a surprise. Again, we should write that down just to get a little clear understanding here of what we had. We had, here, we'll just go look at the highlights really quick. So, literally, quite frankly, the highlights. So, MISC purse services, that's not where our problem began. Problems were really here. So, we had recreation, pets, airfares, motor vehicle insurance. Those were really the sticky items here. Recreation services came in at 1.1, airfares 1, motor vehicle insurance 1.5, car and truck rental came in at negative 0.7, that's fine. Hospital related services at 0.5, medical care services at 0.7. Yeah, let's write that down. And right here we're gonna go medical care services at Yeah, there we go. So those were all your hotties. Okay, Bloomberg Intelligence. Modest CPI beat probably won't have a major effect for Fed pricing in the near term, but another 0.3% monthly print in January could take a March rate cut off the table. Totally agree. Market hasn't moved, and all, like, most of the goods came in negative. It was a specific little services sectors there. They came in hot. Recreation, new vehicles, education, airfares, shelter, biggest increases. Market hasn't really moved the needle yet on Fed rate cut expectations. Oh, don't worry, it will. Give it a second. We'll be starting to cut off March here. Yesterday we were on the March. Yeah, we got to price that in. Yesterday on March, rate cut expectations were like 70%. And that's got to get under a coin toss. It's going to be under 50%, I think. So, yeah, we were 69.6%. Yesterday is how we ended the day. Intraday, we were over 70%. Yeah. Okay. Given this data covers the peak holiday season, it probably isn't a major surprise to see airfares rise. Yeah, but there's a seasonal adjustment. So, anyway, for the Fed, okay, we read that. The only size and scope you need for the day, motor vehicle insurance rose 20.3% over the past year. Yes. Yes, that's a lot. So, let's see here. Supercore popped up a little bit at 0.44. Not great. Don't love to see that. I'll pull that up on screen here in just a moment. And Nick T writes, a mostly consensus CPI report. Core inflation as measured by CPI was 0.3% in December, leading the 12-month rate to tick down to 3.9% from 4%. The 6-month annualized rate was 3.2%, up from 2.9% in November. It matches the second lowest reading since March of 2021. I could always rely on Nick T to give us a nice little bullish pat on the back. You know, there were parts of this that came in a little hot. Okay, like, sorry, I wanna side with Nick T here, but you know, I gotta give it to folks. You know, we got the goods disinflation. There's no question about that. But some of these core services, they got a little bit of a poppy doodle here. So this is the chart of the poppy doodle. As you can see here, all of the 3, 6, and 12-month items are essentially down. However, you will see that the 6-month rate, which is the mid-colored blue one here, it doesn't even look that way. But anyway, 6-month rate annualized 3.2, up from 2.9 in November. Still matches a low level. So we have this. Supercore numbers are out. Let's go ahead and look at Supercore. Supercore. Yeah, Supercore. Yeah, there it is. Not fantastic. So this is your 0.44 line. We came in hotter than that in the October read. The November read came in low. Then we come in hot again. Not great, but transportation services here is the blue segment of that. Took up a big 2.2% of that. We've got, rec services were in that. Other personal services, those were nominal. Educational services, that's nominal. Water, sewer, trash, those were nominal. It's really recreation services and transportation services here. And when you look at that on a year-over-year basis, this is kind of what Supercore has been looking like. What you really want is this black line to really just finish the job of getting down towards about 2%. Not seeing that yet. So then we have, what else? Jobless claims numbers came in warmer than expected, which is fine. We don't want to see joblessness. That's good. Likely to be interpreted as unwelcomed but unsurprising. Today's report, fine. Oh, interesting. It looks like the BLS will be applying a new methodology to used cars and trucks this month on. The CPI program plans to update the mileage adjustment applied to each sampled used vehicle and used car and truck index. The assigned mileage amount will now be replaced by a monthly average mile amount based on the age of the sample vehicle and not the make and model. Okay. That's to try to figure out the value of used cars. Anyway. Well, there you go. The monthly change in core consumer prices met the ostensible economist consensus. Well, only because of rounding. Like, this is not a consensus read. Anybody who tells you 0.3 is consensus is not paying attention to the fact that consensus was based on a rounded 2.5. So, you know, I just gotta be honest here. Like, it's hot. Yeah. So, you know, we can say what we want about it, but it's a warm report. And you know, I personally, I wish it came in a little bit softer than this, but you know, my wish and my desires don't create core services. Anyway, I should note that prices for both new and used cars rose again. Yep, that was also interesting. In terms of what voters most notice, the staples isn't really good news for the Biden administration. Some grocery items like breakfast cereals and other cereal products are down the most since 2018. But food prices are still up on the month. Meat, poultry, fish, eggs rose further last month, and that's on top of large increases earlier in the cycle. Yeah. Interactive Brokers analyst calls this a non-event. Says that while the headline was a little higher, pump prices, he added, are edging lower. Yeah, I don't know about that, man. That super core came in warm. That's not great. All right, let's listen here for a moment.
When you haven't bought it, right? You had to convince people. We call it orange pilling, hence my beautiful jacket.
Which fits.
Okay, this is bizarre.
So you had the orange jacket, but you didn't have glasses that didn't have a little safety pin in
My
it?
Warby Parker's broke, but I got some new ones
On the
coming.
way, because you must have, I've seen,
That was about a week
I've seen
ago.
blue glasses.
Okay, this is freaking ridiculous. Whatever. So now I'm going to switch to Bloomberg because this is annoying. And in the meantime, let's just see myself what's going on here. So what else? So again, super cool right here. Shelter costs rising. We got that. Shelter index increased 6.2% over the last year, accounting for 2/3 of the total increase in all items less food and energy. Yeah, used car CPI was the swing factor. If that came in negative, we would have missed. It was literally, you could blame used cars for this one. You could literally blame used cars for this. That's crazy that one thing could have knocked us out. So that doesn't surprise me, mostly because we were expecting 2.5%, but instead we got 3.1 basically. Again, that's it's warm. Okay, so. But that is interesting that just one number could have dragged this down. And it makes sense, too, because if you look on screen here, the biggest contributor was transportation services on both of them. So we would have come in negative had it been for used cars coming in negative. Honestly, I've been watching used car prices come down. So, again, that was another reason. I was looking for 0.3. I'm like, I don't know, man. Used car prices coming down. You know, like, things were looking good. So I'll show you what I mean, by the way, with used car prices coming down. I mean, this is just, it's like very obvious. Yes, they're still more expensive than they used to be. Duh. But all you have to do is look at the, there it is. The index of used car prices. You can see how bumpy the ride is. But used car prices, even in December, came in negative. So I was expecting that to be a negative contributor. And the fact that they came in positive was quite a surprise to a lot of economists, because a lot of economists use this chart as well as a way of saying, oh yeah, okay, what's going on? So as you can see here, we got a 0.5% increase in CPI readings here. So again, oops, but oh well. Okay, what else? So Nick T's happy, I guess. I'm not. That's a bizarre bump on used cars. Okay, looking for more suit commentary. Okay, again, the used cars, weird. Goods, negative. We're not so worried about that. And then, obviously, the rent of shelter, still slowly rolling over. Medical care services, 0.7. It's pretty warm. Hospital, 0.5. Pretty warm. Car rental came down, thank God. And airfares, 1%. Dang airlines. Okay, it's fine. It is what it is. So, Then we have the impact of yields upward on CPI is likely to be limited over the medium term. Shock model suggests that the two-year treasury yields will rise by about 3.5 bips through the second quarter of 2025, with the 10-year rising by less than 2%. Whatever, that's after this data. Today's data didn't quite throw a bucket of cold water over the rate cut debate, but it does add a sprinkler effect. The reality is some core components of the inflation index are refusing to slow the way the script is looking for it. Yeah. Infrastructure Capital Advisor says he continues to expect CPI core to approach the Fed's 2% target after May due to strong base effects. After May, really interesting. Thus, he adds, will basically lead to the Fed cutting rates at the July meeting. So a lot of people targeting June, July. Yeah, it's because today's data is just sort of the, honestly, I think it's the nail in the coffin for March. I think you're probably, you're probably looking at a read here that's going to get beat up. So again, let's look at the rate monitor here. Rate monitor right now has the rate cut odds still at 69.1%. I'm sorry, 69.6%. Gotta read that right. That's going to plummet. Give it a second to update. And by second, I mean it usually takes about 30 minutes for those futures to really update. But once they do, yeah. I mean, look at the 10-year right now is up 2.7 basis points. It's not a massive move, but you're probably going to see a move on your interest rate sensitive sectors. So the NASDAQ's negative. Bitcoin is up 47.3 after the SEC approvals, which we were expecting. Coinbase is up, which is great, makes it easier to short. Tesla down 1%, and most of that drop happened right here on the CPI release. We were sitting at about 34.5. We lost about the whole half of a point here on that data. Affirm's moving down on this. Nvidia is moving up again. Let's go. Enphase moving down 1.5. Let's go ahead here. And let's look at the pre-market movers. We've actually got quite a few of the crypto plays moving positive today. That the approvals actually happened. And looking at the downside, really Foot Locker, Affirm, Enphase, Redfin, SunPower, Rivian, Tesla, all interest rate sensitive stocks. All of them. Well, that makes sense. So then you've got, let's see here. Monthly increase is 0.4%, little change from 0.44 in November. This is a category JPOW and policymakers have highlighted as a focus. It's super core services. That's because housing costs are expected to come down in time, while goods prices generally are also coming down, leaving non-housing services as the key area of price pressures. Yes. Another suit here says he expects to see CPI core approach 2%. Yes. Markets across the board are struggling for direction. Equity futures wavering between gains and losses, as are bonds. 10-year treasury topped 4%. Yeah, well, the dollar fluctuated. Well, yeah. Okay, yeah, none of that's a surprise. Oil's up about 2%. Not great. Want to see that come down too. And then, of course, 10-year treasury here, 2.7%. I'm honestly surprised that it's not higher than that. Let's look at the 10-year break even. See the activity here. 10-year break even. Pull this out. Yeah, 10-year break even moving up on that one. Sorry, that's the 10-year break even. We usually look at the 5-year break even. My bad. I'll look at that one too. 5-year break even also moving up on this news. Duh. Neither of those are a horrible surprise. They're not like de-anchoring expectations. It's not horrible. As you would expect, this one report isn't like the end of the world. It's just annoying. So let's grab this here. This is the 5-year break even. And if you pop on over here to the corner, you can see the increase, the poppy doodle there. Little poppy doodle. Not fantastic. Would have loved this to come in as I expected. I was wrong. Damn. Oh well. So, looking at updates here. No. No huge updates here. Okay, that's fine. Other than news of an avalanche in Tahoe. Man, that's scary. I go skiing there. But anyway. Okay. So let's jump in over here and see what Becky has to say.
Western Energy and a $7.4 billion all-stock transaction. That deal will make Chesapeake the top natural gas producer in the United States. Google taking another step in its cost-cutting drive. The tech giant says that it will lay off hundreds of employees across multiple teams, including the voice assistant team, the hardware team, and the augmented reality team. And Netflix ad-supported streaming tier now has more than 23 million monthly active users. Netflix president of advertising, Amy Reinhart, reported that figure at the Consumer Electronics Show in Las Vegas. It is up 8 million from the numbers the company released just 2 months ago. Wow.
You know what's funny is I'm just reading some commentary here. Used car and trucks index rose 0.5% over the month after rising 1.6% in November. And remember, the median used vehicle index is like straight down for both of those months. And their comment here is like, what data is the BLS using? This is total BS. Yeah, that's interesting. I mean, I always go like, all right, well, the numbers they're going to give us are what they are. You know, we could be jaded about them and call them rigged, but yeah, it is interesting how much of an effect used car prices kind of screwed us here. So, yeah, big deal. So if you got red in your portfolio today, blame used cars. Goldman Sachs says there's nothing in this report that'll push the Fed to cut sooner. Duh, lady. Everybody's talking about them delaying the cuts, not going sooner. It's like the most duh thing ever. Well, of course, CPI cooled slightly less than expected, nonetheless edged down to 3.9 versus 4. Yep, that's what we saw Nick T talking about. While today's data is unlikely to push the Fed to signal imminent cuts, traders continue to fully price in 5 cuts for 2024. An economist at CIBC Capital Markets thinks given how much inflation has come down, Fed policymakers are likely to be more attuned to a softening in the economy. Fine. All right. Whatever.
Market reaction to CPI, Jim, as we said, a little hot at 0.3, more than half a shelter.
Kevin, you missed the fact that the medical care sector increased 0.6%. Are you serious? Do you realize, like, I wrote this down, right? Like, where were you? Medical care sector, it's in my list. It's literally in my list of sectors that came in hot. And I'm pretty sure it was 0.7% for medical care services. Like, it came in hot. So, you know, hospital-related services 0.7 right there. Medical care services hospital-related services 0.5. Medical care services 0.7. So, A, you're wrong. B, clearly you weren't watching because I did cover it. And C, thanks for trying to make me seem like I was wrong when you were wrong. Okay, so Bitcoin going up and to the right. So Bitcoin is going up. Bitcoin is interesting. Bitcoin is going to be tougher to predict which direction it goes, I think, after the ETF move. I think Coinbase, there's going to be a moment. I mean, you already know this. I think Coinbase is probably going to go down. But it's going to be interesting because I have not started shorting yet. Because Coinbase usually moves with Bitcoin, so it's gonna be really interesting. We'll see what happens. Then we've got temporary strikes cause people to buy used cars. That's interesting. They see higher costs coming. Let's see what else here. I was looking into the new Ford F-250, $100K for a loaded truck. Crazy. Yeah, that's nuts. Kevin, maybe I missed something, but why is tech laying off so many people? Yeah, I was looking at the layoff counts yesterday. Oh, Tesla just notified workers it will boost pay for all U.S. production workers. Yeah, well, that's going to leave people nervous about margin, but it's a good thing. That's fair. Layoffs are not at the pace of what we saw last year, so we're getting less layoffs than we saw last year, but it's definitely something that's going to push the jobs market into a direction where people are like, wait a minute. You realize that we have you know, a potential softening in the jobs market that's coming at the same time as still up there super core inflation, that's not a good combo. That's the stagflation vid. The stickiness warnings are dropping in my inbox. Looking through the small rise in headline inflation, which was due to energy prices, I think the message from this release is that core inflation is proving sticky. This will give the Fed grounds for caution, as they are unlikely to cut rates as quickly as the market expects. I agree. March is going to be bye-bye after this report. Yeah, it just dropped a little bit. It's down at 64.7% now. So we finally got that about 5% move down. It's going to drop even more. It's going to drop even more. Look at last year's seasonally adjusted numbers. Super high January, Feb, super low March. Maybe. Somebody was talking about the comps. One of the suits was talking about the comps rolling over in May. Let's see here. Possible next ETF trade. That's interesting. I agree with this, actually. This idea that maybe the next currencies to look at for crypto would be your ETHs or Solana, whatever. I don't disagree with this. I think we're probably going to get more of these ETF approvals. I think so. So what else here? Holy Tesla Batman. That's funny. Then once 4%, unemployment automatically expected to be 1% higher. I'm not sure what you're talking about. Let's see. Does it... what is... are you planning on short... okay, what is this? Yeah, I haven't changed any of my opinions. Okay, let's see here. Somebody writes here for Bitcoin info. Bitcoin's great. You know, the fact that the approval came in, it's fantastic. So, but else, what else? Nvidia to 600. Yeah, that's probably where you got to start selling. BTC ETF paved the way for LTC. Probably. And we could take a peek here and see how the other ones are moving. Okay, let's see here. Okay. Yeah, somebody's like, it's more than just a crypto exchange, Kevin. Well, look at their revenues. Look at their revenues. Where does 74% of their revenues come from? Oh, wow, trading. Okay, so Bitcoin in the last 7 days, actually last 24 hours is up 6%. Ethereum, though, up double that. Ethereum up 11%. Yeah, I think that's probably the best positive trade is Ethereum. Like, I would be down to go long Ethereum, short coin. Haven't done it yet, so maybe if it rallies today, be the perfect time to do it. But I would be down for that. Long Ethereum, short coin is an interesting one. Because if Ethereum ends up accepting or going for an ETF, it's, again, more revenue robbed from Coinbase. If people actually end up going for these ETFs. So it'll be really interesting to see. They should start trading today, as a matter of fact. So I want to see if I can get... Let's get the tickers here. Okay. Yeah, I mean, I have them. Let's throw in El Photo. Here we go. Here it is. Boom. So, BitB. We've got Arc Bravo. Oh, yeah, it's listed as a halt. See that? Look at that. You'd actually pull it up. So, Arc B is listed as a halt. And then, of course, if you do like, you know, Valkyrie, BRRR, Valkyrie Bitcoin Fund. Oh, interesting. That one has pre-market trading. Okay, wow, that pre-market looks disastrous. Down from 2092 to 13. Okay, but that's pre-market with no liquidity yet. That's fine. Then we've got HODL. Yeah, most of these are on halt. BitB for the Bitwise. Yeah, they're all halt. So, yeah, interesting. Fed March meeting is far enough away that economists, investors alike can feel comfortable setting aside somewhat disappointing CPI report here. But as we get closer, it feels like the data we are going to need we're going to need it to be more uniformly justifying rate cuts. Yeah, exactly. Today's report doesn't help for justifying rate cuts. So your rate sensitive is just going to take a little bit of a backseat. Again, it doesn't seem like markets are reacting too dramatically to the slight beat. I don't like it. Maybe I'm being more dramatic. I'm less happy about it. So 22 minutes away from the market open bell here, by the way. Let's see here. Yeah, 6:30 is 21 minutes here for opening. I would not buy ETH or any crypto for ethical reasons. Bitcoin is the revolution. Altcoins are a distraction. Well, I mean, I'm looking at that as a trade, but okay. Feels like the market should or could be more red, but it isn't. I'm actually surprised by that. I agree. I agree with you. I think this is not a great report. Should be a little warmer. Or should be a little, what's it called? Market should be down a little bit more on this. But they're really not. Look at that. I mean, you're still positive on the Qs, barely. You're negative on the interest rate sensitive Tesla. That's not a surprise. I'm glad coin is pumping because like I said yesterday, if it pumps after the approval, it's perfect for me. So we'll see how it moves. But I've got the shotgun ready for it. Nvidia's up 1% in the pre-market. Enphase is down just about the same. Those two are like offsetting positions for me, by the way. So as the more Nvidia goes up, I just need Enphase to go up, and it's going to be so glorious. And it'll come with rate cuts. It's just going to take some time, I guess. Palantir down 12 basis points. Costco's down a few basis points. Walgreens down 43. JP Morgan down 46. Microsoft is up 52. Google's up 13. Yeah, there's nothing really here in terms of big movers. Marathon, MicroStrategy, those guys are moving on underlying prices. That makes sense. Okay, real issue at stake for markets isn't when or how many times the Fed Reserve is going to cut. It's that the next decision will be a cut. Well, whether or not it'll be a cut. It won't be. Don't you worry. January 31 and March? I don't think so. I mean, we'd have to see some real weakening in the jobs data. But so far, the last jobs report, this CPI report, continuing claims, not showing an urgency here. Urgent need to cut. So, I don't know. To me, March is gone. Okay, what else here? Kevin, Mag 7 the past half of the year was the play for hedge funds. Now that they are no longer getting a cut in March, they are piling back into high cash flow companies. What, like the Magnificent Seven? HUD 8. Oh, I'll actually be interviewing HUD 8 soon at their actual facility, which will be kind of cool. So we'll go visit the crypto miner. I think that'll be super cool. Let's see here. What else? Don't buy the ETFs in the first hour. They're supposed to be tracking the Bitcoin price 1-to-1, so you could be overpaying significantly, says one person. It's interesting. Yeah, that'll be fascinating to see how trading in those start working. Kevin, crypto markets are not rational. Don't treat coin like a normal stock. Bitcoin goes up. Everything crypto goes up. Don't lose your money, bro. Yeah, there's the possibility for that. Coinbase and its exchange has its revenues from trading. With that revenue, or with that logic, Tesla is a car company. Yeah, I mean, there's no doubt. I mean, I underwrite Tesla as a car company, right? Like, I always think that's so funny. And people are like, how do you underwrite Tesla? Well, I underwrite Tesla at about $420 per share based on car deliveries. I don't even include, I virtually don't include, I don't include anything for insurance. I don't include anything for Optimus. Barely include FSD. I just throw that into, a higher average selling price. Or sometimes we'll parse it out slightly at, maybe a take rate of 25% or so. But yeah, no, I underwrite Tesla as a car company, no doubt. Yeah, it has a lot of other potential verticals, but to me, those are bonus. That's the way I underwrite it, right? So that doesn't mean Tesla doesn't have great things when it comes to full self-driving or Optimus or otherwise. But yeah, the way I do my sort of base case analysis is always just as a car company. Okay, so let's see what else we get here. Yemen Houthi leaders, any U.S. attack will not be without a response. Yeah, whatever. They scream loudly here. Lucid delivered slightly more vehicles than expected. 1,734 versus 1,696. Yada CEO purchases 16,000 NVIDIA AI chips. Yeah, that company is just freaking killing it, by the way. That company's killing it. Tesla broke the 200-day moving average. Is that true? I know we've been kind of like in the... no. Oh, okay, yeah. 200-day moving average right now is 231. Yeah, it's not great. I've been saying this. I'm like, we're like in this, like, you know, dirty middle zone for Tesla here. And ever since we didn't break out that 258 number, probably going back to that 221 level, kind of been trending towards that direction about the last week. So let's see what else here. Yeah, eHack still has my coin analysis if you want to see that. We got a lot more things hitting coin today. I've been out the last couple days, so I haven't been posting. But yeah, stay tuned for a lot more stuff. We'll throw some really fun stuff up there today. That'll be good. What else we have here? Surprisingly, a strong CPI print shows the road to a durable return to 2% inflation is bumpy. Yeah, no kidding. And last mile could be difficult. Remember, that's also what Jerome Powell said. Jerome Powell argued that the last portion would be the hardest. Some of the disinflationary impulse for core goods, a key driver of easing prices over the past few months, has faded. It will likely take more than much anticipated disinflation in rents for inflation to get to the 2% target. Maybe. That said, some categories that drove core CPI in December have lesser weight or depend on producer prices in the Fed's preferred inflation gauge, PCE deflator. A definitive read on how the Fed sees the latest inflation figures will depend on PPI data out tomorrow. Ooh, that's true. We do get PPI data tomorrow, which I think is less important to the Fed. But tomorrow's PPI is expected to come in at 0.1 month over month. Less food and energy, 0.2. Less food, energy, trade, 0.2. Final demand year over year, 1.3. Core minus food and energy year over year, 2%. Minus food, energy, trade year over year, 2.5%. So trade's a little bit of an anchor there. That data will come out tomorrow. We'll cover that live, obviously. I might have to be from a hotel room again, which sucks. But whatever. Hope they have good Wi-Fi. All right. So let's see what else we have here. Thank you for saying you love the market open lives. Appreciate that. Let's see here. Somebody here says, I'm down 30% on Coinbase. Should I cut my losses and sell then? I was hoping it was go back up. Well, it's totally up to you what you do. But right now, it's actually trending up. I'm not short yet. I decided I wanted to see what would happen this morning in trading time. And it's up 5%. So I'm glad I'm not short yet. And good for you. Your bags are getting lighter. So let's see. I mean, if there's some euphoria here today, it could be very delicious. So let's see here. Bitcoin ETF is another scheme that smells a lot like ESG from BlackRock. How interesting. Let's see. What else? Somebody here writes, crypto itself is pointless once it's regulated. It literally has no purpose and will crash with the implementation of central bank-backed crypto. I forgot the acronym for it. A CBDC, central bank digital currency. Yeah, I don't think Bitcoin crashes or has anything to do with the central bank digital currency. I disagree with that. I think Bitcoin will be very independent of a CBDC. And CBDC, in my opinion, would actually, if anything, have a positive effect for Bitcoin. In my opinion. Could be wrong. In my opinion. All right. So, what else? What else? What else? Let's see here. Market open lives are the only thing I look forward to when I get up before going to work. Oh, thank you for that. That's awesome. The Stonks Market writes that. Seems like a lot of people are salty about missing out on BTC. I love it when people call other people salty. Kevin is our father. Well, I don't know about that. I might have a lot of kids. But, yeah, anyway. Let's see here. I want coin euphoria so I can start to short around 185, says somebody here. Interesting. Yeah, that's interesting. Honest Lawn Care. Love the video you made last night. Really appreciate your transparency and honesty. Oh, thank you for that. Yeah, I enjoyed making that video. What's up, Kevin? I try to watch all the vids. You have a great perspective. Well, thank you. Let's see here. Did you see Circle, the USDC issuer, is filing for IPO? Ooh. You know, this is like the perfect time to pull the trigger on, like, trying to, you know, IPO, basically, in the crypto market. Love from Israel. Oh, thanks for being here. So... Oh, yeah, and I'm posting... I've got a few interviews dropping soon. Let me pull up and see if I can pull that IPO for Circle. And we can look at the financials for it. Ah, Circle files for IPO. How interesting. But yeah, we've got interviews dropping. I want to give you a quick look at some of those. I have Silicon Valley, Tesla, Owners Club. That drops Friday, probably 1 to 2 p.m. Brett from ARK Invest, probably also tomorrow. Matt Wallace drops 9 a.m. Saturday. Lauren Southern drops 9 a.m. Sunday. So, yeah. we got some cool things coming. If I can get the Brett interview out at by 5 a.m. tomorrow, that's probably what we're going to do. Yeah, so buckle up for that. That'll be fun. Okay, good. So, let's see here. Ooh, I do wonder how the brokerages are moving today as well. Like the Robin the Hood. Let's see how Robin the Hood's doing. It's up about 3% in pre-market. Interesting. It's at $12. Well, it's certainly come back a little bit. Since November, you've had a nice rise in Robinhood. Very nice. What else? Let's go back to suits. Fed can continue to err on the side of signaling that a steady policy rate will be the path of least resistance. That will halt the latest bond market rally. Yeah, maybe. Gym fees jumped in December by the most since 2020. Wow. Makes those New Year's resolutions expensive. That's funny. U.S. inflation accelerated in December as Americans paid more for housing and otherwise. Yep. It's a visual look at the services category. Ooh, yeah, let's take a look at this. I'll put this up on screen. And then I still want to get the that Circle report, so give me a sec. We'll get both of those. And downloads. There it is. Yeah, here we go. Boom. Look on screen here. Contributions to CPI. As you can see, shelter, still the massive part. Without shelter, it'd be so negative. But honestly, those car services, rip. And these are services. Actually, car services were fine. It was used cars, a goods item. But yeah, otherwise, core services here at 0.436. Let's see what Nick T otherwise has to say. Nope, still talking about mostly consensus CPI report. That's fine. Atlanta Fed wage growth tracker, 5.2% in December, same rate as November. Ooh, I wonder what the Atlanta Fed GDP Now index is doing. It is, next estimate was, well, last estimate was 2.2%. Next estimate is January 17th, so you got about 6 days for another one of those. MicroStrategy is just going to move with Bitcoin, in my opinion. That's basically the only thing that underlies their valuation anyway. Bitcoin ETF is deflationary. People will have less money to spend on hospitals and services. I have no idea how you just pulled off putting that sentence together. Republican. Okay, somebody here is complaining about Republicans, saying that they're promoting supply stimulation as an alternative to the destruction and negative demand destruction. Okay. Is there a time frame to have Bitcoin, to buy the Bitcoin, the hood for the fund? I have no idea what you said. It should be trading today, if that's what you're asking. Somebody writes, definitely higher for longer. At least a month longer. Yes, you're probably right. Kevin, you look like Ryan Reynolds. Ryan Reynolds wasn't too happy with the AI I put together, apparently. So what else? All right. Let's see here. Netflix up 29%. What's my price target for Tesla? You'll see that when I post my Tesla video Friday. Kevin, what do you think about Apple? Are you as frustrated as I am because Apple has not made any significant acquisitions? No, not at all. I'm actually not bearish on Apple at all. So Apple is, I think Apple's a great company. It's a high margin company. It's a pricing power company. I think, you know, the goggles are probably, I mean, honestly, I think kind of a joke. So I'm a little nervous about that. I'm a little nervous that it's just going to be so niche and, you know, I mean, for you to get from like keyboard and mouse functionality to that goggle functionality, I don't know, man. I mean, I know you could use keyboard and mouse and have all your like virtual screens and stuff. I don't know. I think it'll be interesting, I'll put it that way. But I don't think it'll do well, sadly. Somebody here writes, how are the girls doing? They're great. They're so adorable. So I have twin girls now, and when you go to them and hug them or kiss them, now they'll smile back at you. Like they're actually turning into babies. So they're like responsive. So it's very, very exciting. Apple is like a crack dealer. Once you are in, you will never go for anything else. Jerry here says Kevin's too focused on the productivity for Vision Pro. I think of it more as entertainment. Yeah, that's interesting. And then somebody replies, even though it's called, oh, you yourself, right? Even though it's called Pro. So I actually started taking video with the spatial video feature. In case you don't know that yet, the software is out. You just have to go to your settings, camera. It's in a weird place, but you can start doing spatial video recording, which I'm excited about. I started spatial video recording for that purpose. But if you go to settings, camera, preserve settings, and then turn on spatial video, it'll always turn on spatial video. So kind of cool, honestly. I'm pretty excited about that. So you're right. I do want to see it from an entertainment point of view, like the putting myself back in that scene. I think that'll be the coolest part of it. I don't know how long people will be very interested in that, but I do think that'll be really cool. Yeah. Elon going full head on immigration videos. Yes, he is. Very big deal. Okay, 3 minutes to the opening bell here. Let's see here. I think Apple will use the Vision Pro to create a cheaper version for the rest of us. It's possible. Yeah, because the $3,000 to $4,000 is pretty high. Although it's coming on, it's coming up for sale within about, I think, a week from today. Ah, very interesting. Somebody writes, massive deflation coming. You know, today's not the day to talk about that. We're not allowed to talk about deflation today, okay? We got a hot supercore number. I don't want to talk about it. I haven't had my coffee yet, so I'm getting sad. Anyway, so let's see what the market's doing. Tesla down 1.3. I know that's not the market, but I want to see it bob around here. So it keeps trying to recover. I don't know if it will. You've got the Qs, which are rising again. Wow, that's weird. Look at the Qs basically move up despite the CPI. It's almost above where it was. Wow. Nvidia's up 1.6%. We know Enphase and Tesla are down. CrowdStrike up 0.9. Costco's down 0.24. Adobe down 0.16. Amazon down 0.87. What else? What else? What else? I don't know, but we're getting pretty close to the bell. I'm sure we're gonna hit the bell in a sec. Teladoc 0.92. Nah, none of these are really big movers. No massive movers here. Okay, good. So let's get ready for the bell. Keep in mind we've got the next coupon expiration for the gold course is going to be Jan 31. That's Fed Day. So you got some time. If you want to email us for bundles, do it between now and then. staff@meetkevin.com. But the cool thing is we're going to be dropping new lectures. And if you want to be part of the course member live streams right away, if you think you're going to buy it by the end of the month, you may as well buy it now because you're just getting 29 more days worth of value. And if there's something in there that you're like, oh man, I wish Kevin really had a take on this, there's a section where you can ask for suggestions, and I'll be filming more lectures from there this month. So that way you'll have Q4 2023 stuff in there and Q1 2024. It's very fresh. All of the lectures are new in that gold course. And of course, if you want some OG deep dive, stocks and psychology money, zero to millionaire real estate, you name it. All right, let's listen to the bell.
Amazon's a trade down from Chewy. Amazon's more mass. Chewy has a lot of the more expensive things involving a pet, but if the company's stock hadn't dropped to this level, I would be a little more, let's say, circumspect. But at this level, Chewy's good.
That's a good one. There's a bunch of calls. We'll get to as many as we can as we get the opening bell here. Let's get the bell of the CNBC Real-Time Exchange at the big board. On-sport driller Transocean, 30th anniversary at the NASDAQ. It is BlackRock celebrating the first day of trading for the Bitcoin ETF. And we'll talk with their CIO in the next hour ahead of earnings tomorrow, Jim.
Look, I think that, as like many people...
So that's like 45% green, but look at the NASDAQ. Again, candlestick up. Very, very interesting. Up candlestick on the NASDAQ. Down candlestick on Tesla. It's going to be down on Enphase as well, I'm sure. Yeah, well, TBD what direction that's going. MicroStrategy up 7, though. Look at that. Bitcoin's up 3. It's going to hit resistance here at 48.5. Qs, look at the Qs just pushing. While Tesla's dropping, Tesla down 2.2. Qs up 0.44. They're going in completely opposite directions. Nvidia's up 1.14. Yeah, Tesla's in a bad trading range right now. It's probably going to go to 222. And then we get earnings. And then it's either going to go to 190 or back to 258 probably. So, yeah, spreads could be, well, you know, I mean, you just do a straddle. Okay, BTCS Inc. It's up 8%. And where's Coin? Coin, it's only up 3.3 right now. How interesting. It's actually red candle sticking right now. Oh, people are loading on the shorts. Oh no, what's happening? It's going red. Ethereum still up 26.20. Let's listen in here for a moment.
It's sitting longer. It's just, I'm saying we need an explanation. And if they have one, I'm welcome to it. But if they don't, I'm staying away.
Yeah, straddle, just think like buy put, buy call, or sell put, sell call. It's just having one of each.
Coin Trust registered. We'll see. Well, I guess we'll watch volumes to start, right? And price action.
I happened to bump into the CMO of Coinbase on my airplane in San Francisco. And she said, listen, thank you for all the coverage. And I would say that the Coinbase situation was one that where it was down 3 the moment this announced. And I think it's important to point out that there is a love for Coinbase. And the stock went from being down.
Somebody here writes, Microsoft all-time high. Yeah, it's mind-blowing how well some of these in the Magnificent Seven have been doing. It's really, really incredible. But, yeah, you're right. Microsoft up. Look at that. All-time high right there. 388. What a chart, though. Look at that. Yeah, I have to give credit where credit's due. That's really amazing. Drop into like Apple over here. Nowhere near that. Drop into Goog. Also trying to get back to an all-time high. It's pretty close to it, honestly. From 152 up to 146 right now. Not bad. I'm going to grab my cup of coffee really quick because I feel like I'm dying without it. Here, let's listen to Jim in the meantime.
My core business. I think that Robinhood stock ran up in part because of this. But in the end, when you see the report, it's not going to be as related to Coinbase as people think. It's related to whether, some of the programs they have for retirement are interesting, but it's related to volume. And we don't have, if the individual's back and 57% of trading is the individual, you would think that their stock would be met with an equal amount of people who are now trading, and it's not. Not equities. Options, yes. That's an unstable business.
Apple continues to try to climb here, Jim. A lot of discussion about the Vision Pro this morning being their first new category in almost 10 years.
I am still a believer that someone's going to find a way to subsidize it. Right now, it's too expensive. Someone's going to want to open accounts with it, but maybe with a buy now, pay later. When I ran that through Apple, they were, let's just say they were saying, well, that's a novel idea, and saying basically that we don't know anything about that. But I would point out.
Yeah, well, I mean, you could just pay for it with the Apple credit card, and the buy now pay later is built in, so it's not actually a horrible idea. Yeah, I mean, if you could BNPL it for like a couple $100 a month, I don't know, probably gonna be a lot of people who are like, all right, I'll take it. So it'll be interesting.
Yesterday, even though we had a downgrade from Redburn, it reversed during day. I'm not saying anyone had this call, but there is a sense that maybe this is an opportunity, Apple. My worry, Carl, is that, oh, by the way, we saw PCs finally bottoming out. Is China, because anything related to China, when I was at the healthcare conference, China just riddles the earnings of everybody because nothing's what people thought it was going to be in China. So I don't want a major problem with China. Last quarter was not a major problem in the major cities, but if you're related to China, you have to take a hit.
Right. It was a pretty...
Hertz is shifting back to gas-powered cars because of the repair costs being too high on battery-powered cars. Wow. They say it's not the level of demand we anticipated. We may have been ahead of ourselves, says Hertz. Wow. That's weird. Even after the price cuts that you've seen at so many of the EV companies, including Tesla. Wow.
Look, God, I'm going to be going.
And I remember the story a while ago. This was due to the repair of like consumer-led damage, not maintenance, but because like, oh, this is broken in the car, and then it's like, bro, how am I going to get that fixed? Oh, wait 3 months, and it's like, whoa, the supply chains for repairs just aren't there yet.
There was a very positive note on CRM.
Yes.
I mean, now it's so funny because when you see the notes,
I think it's Baird. Baird goes to outperform.
I don't know why people feel like, oh yeah, Mark Benioff, he suddenly cares about profitability. Mark Benioff has cared passionately about profitability since 2008. So they want to realize that when Elliott came in there.
Oh yeah, Bitcoin just broke 48,000. It should go to 48.5 with no problem here. I think it'd be pretty obvious for it to hit 48.5 here. Ethereum over 2,600, also pretty impressive. And Microsoft up 2% right now. Google's up 1.86. Tesla down again. I think it's down at 2.5%. I think it's got to get to 222. I hate to say it, don't want it to happen, but I think it's got to get to 222 before it starts going up again. But yeah, it's down about 2.7 right now. Basically what Enphase is down to. And what else? Lowe's, Adobe, Eli Lilly. Yeah, there's not much crazy movement here other than the crypto related. These guys up here. Amazon up almost 2%. Wow. Snuck in there. Nvidia up 1.5%. Intuit's up 1%. And then, again, downside, interest rate sensitive, 2% over there. Redfin, Tesla, Enphase, SunPower. SoFi, Etsy getting caught up in the red mess. The sea of red. Ooh. As far as suits, let's see what they wrapped up with here. Overall, CPI rose slightly more than expected. Yeah, I think that would be a way to put it. Morgan Stanley economists see the CPI figure. Let's see. As noted earlier, that comes a month later. What is it? Oh, PCE Core. Oh, okay. They see it at 0.2, up from 0.1, fine. Today's hotter than forecast CPI report means the Fed can continue to err on the side of signaling the steady policy rate will be the path of least resistance. Yeah. Yep. So, yeah, this is pretty cool. Somebody here writes, my mom has a birthday Jan 23rd. Ooh, that's Max's birthday. And mother-in-law Jan 28th. When is Kevin's birthday? Kevin's birthday is January 28th. Yep. 32. Kevin, what are you going to say when BTC goes well past 48.5? Well, I'm going to tell you this. It's not going to happen. Not today. It ain't going to happen. It's going to get rejected by 48.5. Rejected. I don't know what'll happen. Even before the BTC approvals, I argued, I go, BTC is the harder one for me to estimate. I think coin based on its actual earnings will be a little more obvious. But we'll see. Somebody writes, love from Brazil. It's awesome. Thank you. Kevin, what's a good place to open my Roth? Beginner investor struggling to decide? Honestly, probably, I mean, assuming you're not trying to trade with it, I kind of like M1 Finance. It's a little bit more methodical in terms of a little slower, mostly because you have the buying windows, but you're still trading on a daily basis. Don't mind that. I think it's very interesting. So what else? I think that's it. So, yeah, hey, remember, I'm here every day the market is open, so you're welcome to join me, kind of get your morning news. Obviously, I do my best to keep eHack updated and get some new info out there. Haven't the last couple days. That's totally my fault because of the travel schedule, and I have more travel today, but I'm gonna, my goal is to get content in there ASAP today. So stay tuned. That'll be really fun. And yeah, I'm gonna hit the button now. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Boom. I kind of love that song. But anyway, or the melody or whatever you'd want to call it. But anyway, yeah, so we'll do some more analysis in the Course Member Live. We'll be live in about 15 minutes. I gotta go get something ready, so I need about 15 minutes, including another cup of coffee. And yeah, this will be fun. So thank you again so much for being here. We'll see what happens in markets, and we'll see you tomorrow. Thanks, folks. Goodbye.